In today's video, we are going to look at my complete Wealthsimple TFSA, and we will begin right now. As a financial YouTuber, I believe in a good amount of transparency with the community. As a result, from time to time, I am going to show you under the hood on my TFSA. I currently have 18 holdings in my Wealthsimple TFSA, and I will show you, well, everything. I had previously given you my top 10 holdings, and since then, I have done a lot of rebalancing. The biggest change is I took quite a bit of profits from CNR and added a few more stocks and beefed up a few other holdings at the same time. My overall goal is to hold no more than 5 to 6% of any one asset without holding more than, well, 20 to 21% in a particular sector. My portfolio is not there yet, as I am still very much over-diversified into a few stocks, and in particular, one sector. If you have been following this channel for a while, I have a feeling you may have a good idea which company and sector I am talking about. Before I open my TFSA, let me know in the comments if you are over-diversified into any particular stock. Also, if you are looking to help the channel grow so I can keep bringing oodles of free financial content to you, then absolutely hit that subscribe button. For today's video, we will be looking at the Canadian side of my TFSA, which has a total balance of $62,488.88, which is up 4.82% in the last month. So without any further ado, let's jump on in. Bell is up first, and I hold 50 shares for a 5.10% stake in my portfolio. Bell is a nice blue chip dividend paying stock. It currently is down 6.70% for me, but this is a stock that will be fine long term. CNR is my next stock. I hold 25 shares for a 6.58% stake. This is a little higher than my goal, but CNR is doing well right now, and this will adjust down on the other side of the bear market. This stock is up a holy banana bread 13.20%, which is why I sold a good amount of CNR in my rebalance, and thus they are no longer my top holding. CNR is really simply a fantastic recession-proof stock. My next stock is Canadian Western Bank, and I hold 100 shares for a 4.28% stake in my portfolio. This is a stock that will struggle a wee bit in the bear market, but I think long term, they will be a great buy. They are currently down 4.45% in my TFSA. Moving on, we have Diversified Royalty Corporation, and this is entirely a dividend stock for me. I really do not have a lot of growth expectations. I hold 630 shares, and they occupy a 2.76% stake in my portfolio. They are currently down 0.18% for me. This is a stock you're not going to get a lot of movement with. Up next, we have Dollarama, which is a new addition to my portfolio. I do have a deep dive planned for them in my next video. Anyway, I have 20 shares, and they hold a 2.43% stake in Wealthsimple. Having just added them as part of the CNR rebalance, their return data is, well, it's not really relevant yet. Holy banana bread, I feel like we need a drum roll for this one. It is Canoe EIT, a channel favorite and obviously one of mine too. Without too much surprise, I am over-diversified in the stock to the tune of 18.62%. I do hold 910 shares in my TFSA, which translates into $91 every month in dividends. This stock is currently down with the current oil slump, but they will be way back in the green once oil starts going up again. Canoe is such a great little stock. When it comes to trying to lower my diversification into them, I'm going to do that by simply not buying anymore and letting the rest of my stocks increase in value to sort of lower Canoe organically. Next, we have eSplit Core, which is another fantastic monthly dividend payer. I hold 200 shares for a 4.96% stake. This Split Core is entirely invested in Enbridge, and they have been a very reliable dividend producer for me. Now, they are currently down 3.4% in my Wealthsimple TFSA. The next one is also special for me because it is the first stock I ever bought, and that is Fortis, and I do have 70 shares for a 6.69% stake. By now, you may be seeing that I am over-diversified in the energy sector. I have been pulling back a wee bit, but I expect to remain over-diversified in that sector for the time being. Fortis is currently down 5.07% in my portfolio. And just to add, Fortis is less than 1 year away from becoming Canada's second dividend king, and this is as blue chip as you can get. Huddle, or the Harvest Equal Weight Global Utilities Income ETF, is my next stock, and they are also here for the dividends. They have a solid yield of 6.7%. I have 200 shares for a stake of 6.07%. They were also just added in the CNR reshuffle, so their return is also irrelevant data. Well, this time. HYLD, or Hamilton Enhanced U.S. Covered Call ETF. HYLD, or Hamilton Enhanced U.S. Covered Call ETF, is a covered call ETF that was recently created, but they have been providing very nice dividends. In fact, $34.79 a month for me. I am currently the proud owner of 250 stocks for a 5.52% stake in my portfolio. They are also up by 2.18% for me. Next, we have a REIT called Innovalis. They are here for the dividends. I hold 400 shares of them for a 4.54% stake in my TFSA. They have struggled a wee bit in the bear market, and as such are down 9.80%. Up next, we have Manulife, and they are a great little stock. I hold 120 shares, which adds up to 4.53% stake in my portfolio. They have been doing fantastic and are overall up 5.97% for me. Manulife, being one of the biggest insurance providers in Canada, is definitely blue chip. This takes us to Power Corp of Canada. I have 40 shares in them for a 2.22% stake in my portfolio. I love this company, and not just because they are a significant investor in Wealthsimple. I probably should have a few more shares in them. They are currently down 2.12% for me in my portfolio. Up next, we have a royalty stock in Pizza. I just added them in the CNR rebalance. I hold 250 shares for a 5.32% stake in my TFSA. That is an extra $16.88 in dividends every month. My research for the recent royalty video is what sold me on Pizza. We now have another REIT with Slate Grocery and another dividend player. I hold 100 shares for a 3.25% stake. They were also added in the CNR rebalance, so their return data is useless for now. Remember, with REITs though, you definitely want them in your TFSA so that you can avoid the tax implications of not having them in a registered account. Now that brings us to a Sir Royalty Income Fund, which is, well, they're one of my favorite dividend stocks. They deposit $27.45 every month into my TFSA. I hold 305 shares for a 6.79% stake in my portfolio. This is also a good little growth stock, and they are currently up 2.33% for me. Another dividend play for me is Timber Creek Financial, and they bring in $23 every month. I hold 400 shares for a 5.41% stake in my portfolio. The stock is currently down 1.75% for me. This is one I never really worry too much about whether it's up or down. Finally, we have 50 shares of Tourmaline Oil for a 5.82% stake in my TFSA. They have great growth, have decent dividends, and a special extra dividend payout coming up later this month. This stock is currently up in my portfolio by 1.23%. That is my TFSA as it stands right now. I do need to scale back some of my oil exposure, and that will be something I will be looking out for. Currently, this mix provides $269.78 in monthly dividends, and another $218.66 in the quarterly payouts. This adds up to $4,112 in dividends yearly. Of course, these dividends stay put and are reinvested to grow more dividends. That is the beauty of snowballing. I will look at doing another one of these peeks under the hood type videos after any major rebalancing on my TFSA. You can look for another one of these after I do the eventual oil rebalance. In the meantime, hopefully this video has perhaps created a further research moment or two. The fun does not have to end here, because you can always watch my video on royalty dividend stocks. I have linked it in the top left corner, or right below that, YouTube will show you a video they think you will like. Your click will decide who is right, and I will see you in the next video.